Alright, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. Right. Before we start off, just want to make sure you guys can hear me loud and clear. Right, and just want to make sure you guys are able to view the slides as well. You should be looking at IC Markets webinar live analysis session 24th July 2023. Right, we're a little bit early, just by a minute or two, so let's just wait a while for everyone to tune in. Hope all of you had a great weekend, right? Spending time with family, friends, and also maybe catching up a little bit of markets as well. I hope you guys have managed to catch the pre-market analysis with Desmond earlier this morning as well. All right, hi Bob. I just want to make sure you can hear me loud and clear and see the screen as well. Right, I think on my end here everything looks good in terms of audio, video, and just want to make sure it's the same for you as well. Clear but not loud. Okay, maybe this is a little bit better. Yep. Okay. Right, just let me check the settings one more time before we proceed. Yeah, I think everything looks good. I just brought the mic a little bit closer, so probably that would help with the audio. All right, thanks, Bob. All right, everyone. Thanks for tuning in. And today's session is the live analysis session, where it'll be a bit of continuation from the pre-market analysis with Desmond earlier this morning. I hope you guys have managed to catch that as well. Otherwise, do head on to the YouTube page and where you can watch the uploaded file from this morning's webinar. All right, of course, as usual, we'll start off with the disclaimer. Any information in this video does not contain and should not be construed as containing investment advice or investment recommendation or an offer of solicitation for the transactions in any financial instruments. All information is presented as educational material only. So do take note of the risk warning that comes with trading CFDs. They are complex instruments that come with a high risk of losing money rapidly due to leverage. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. All right. Hi HMH as well. Hi, good to see you. All right. So my name is Ketan Rameshchandra, and I'm an investment analyst here at Everest Fortune Group, where we have been the finalists for the best FX research and equity research for the following years, 2019, 2020, and 2021. So this webinar series is brought to you with a special partnership by IC Markets and Everest Fortune Group. Right, so before we dive straight into the charts, I think let's just cover some of the main key economic events coming up this week. If for those who have watched the pre-market analysis, I think you would have known that we have a trio of major central bank announcements coming up this week. We have the Federal Reserve, the ECB, and the Bank of Japan. Right, so we have three of the biggest central banks in the world that are going to announce their interest rate decision, starting with the Fed on 26th of July, the ECB on 27th July, and the Bank of Japan on 28th July. All right. Okay, so let's look at Forex Factory. Right, so I'm on GMT time, and now currently it's about 9:33 a.m. All right, hi Jamili, good to see you as well. Okay, just recently we've had flash PMI data out of Europe, and we'll have the PMI data for US as well coming up at 1:45 p.m. GMT. So as we can see, a common theme that's going on throughout most developed economies, whereby we see manufacturing activity remaining in contraction territory. So what this means is when the PMI for manufacturing PMI number comes up lower than 50, that means that sector is in contraction, whereas services sector has been expanding. So if you see any PMI reading that's above 50, that indicates that that sector is expanding. So as we can see in France, Germany, and in the Eurozone area, as well as in the United Kingdom, the common theme is manufacturing activity running in contraction territory, and this has been occurring for many months. For the UK, it's been occurring since August of 2022. For Germany, which is the industrial powerhouse of the EU, it's been in contraction since July of 2022 as well. And France was a similar story since July as well. So in general, you can see manufacturing activity in the Eurozone is poor. And similarly, in the US, we see the same picture as well. Manufacturing activity in the US has been contracting since October 2022, and overall growth has been led by the services sector. Right, services have rebounded strongly this year, and that's carrying the overall growth. All right, so these are the latest PMI data that just came out today. Yes, of course, Jamilu, we'll start off. We can look at pound dollar as well once we run through the calendar, and we'll dive straight into pound dollar, or maybe we'll start off with the dollar index first, and then transition into the pound dollar. Okay, so central bank update. So Wednesday, 26 July, 6 p.m. GMT, we have the Fed releasing their or announcing their federal funds rate. So currently the rate is at 5.25%. They're going to raise it by 25 basis points to bring it up to 5.5%. Then we have the ECB as well with their main refinancing rate at, where is it here? Yes, at 4%. They too are going to raise it by 25 basis points to bring it up to 4.25%. And of course, we have Bank of Japan on Friday, 28 July. Right, the timing is always tentative because the Bank of Japan doesn't explicitly give a fixed timing for the announcement of their interest rate decision, but usually it's around I would say 4 a.m. GMT. Generally, the report and the monetary policy statement is released, or they are released at about 4 a.m. GMT, and between 1 to 2 hours after, we will have the press conference as well. All right, so do take note of that. For the Bank of Japan, it's not a fixed time, but we can expect the data to be released at about 4 a.m. GMT. All right. Okay, so now let's head on to trading view. All right. Okay, so here I am on the dollar index chart. I'm on the daily time frame, right? Okay, so as we can see, some of the levels here that we've identified earlier this morning, right? So we can see the dollar. Oh, let's go to the weekly chart first, right? So you can see the dollar index actually broke a 2-week losing streak, right? It had a strong rebound last week as it went from 99.90 roughly all the way to close at 101, and this followed 2 strong weeks of decline in the dollar index, right? So this move down here over the last from 3rd of July to 17th of July. This was primarily led by uh, falling inflation data. So CPI and PPI data was falling rapidly, and that is why the dollar was selling off hard, and that is why we saw dollar index fall in value. But last week, you could say there was a bit of support for the dollar index, 100 being a very big, I guess, magnetic number or a big level where price probably found support here and buyers came in as well. And also another primary reason for the dollar index to rise strongly on Thursday, 20th July was primarily due to the unemployment claims, right? So if you look at here, unemployment claims in the US are released on a weekly basis. So what happened for the last 2 weeks is that the claims have been coming in, they've been trending lower. So right, so as you can see, since July 6th, claims have been trending lower, and they have been coming in much lower than the estimates as well. So as claims come in lower, this means there are less people filing for unemployment benefits or claims, and that translates to the fact that the US labor market is still robust. So this then pushes the value of the US dollar up, and that is why we saw dollar index have a very strong rise on Thursday, 20th of July, right? So this is just some fundamental background to explain why we had this strong finish in the dollar index last week. Okay, now as we start this brand new week, it does appear that some of this strength has continued so far. Okay, so let's just zoom into the 4-hour time frame and try and see where price is currently trading. Right, so we can see price has broken through the 38.2% Fibonacci retracement, and this is also a nice overlap here. If we zoom out, we can see that this level at 101.10 is a pretty strong overlap support in the past, and now it acted as a relatively strong potential resistance area which aligns with the 38.2% Fibonacci retracement. But we can see that now, especially today, this afternoon when the PMI data was released in Europe, we saw a lot of demand coming in for the US dollar, but now we see that retreating. So we are still, I would say, pretty close to where the first resistance was initially identified. So let's just wait for this candle um, to close, and then we may get a better clarity on the direction of the dollar index. But I suspect if it starts to fall back towards the first resistance and the candle closes close to that, we could see the dollar probably slide lower as well, or rather the dollar index slide lower. All right. Okay. With that, let's go on to pound dollar. Okay. Right. So this is pound dollar. All right. These levels were identified on the daily time frame. So let's just look at that first before zooming into the H4 time frame. All right. So we can also see a strong ascending trend line here. Price has bounced off this level several times. And we also see a nice overlap here at 1.2850, which is where the current first support is. We can see price currently trading below this first support, but let's see how it plays out as US session comes online. Second support on the daily time frame is at 1.2635. Again, we see a very nice overlap at this level here. And in addition, okay, to the upside, the first resistance is at 1.3288. Again, we see a pretty strong overlap here, and also there's a Fibonacci. This is what it is, a projection. Is there a projection here? This level is okay, yeah, so this level is a Fibonacci projection, 100% Fibonacci projection. Just wanted to clarify. And also it also aligns close to where the 78.6 Fibonacci retracement is as well. So we have a confluence of Fibonacci levels that have helped us to identify the first resistance and the second. Oh, this is labeling error here. Second resistance is this swing high here on 14th of Jan 2022. Alright, so these are the levels on the daily time frame. Now let's zoom in onto the 4-hour time frame to see to identify more actionable levels. Okay, so let's see, we can also do a Fibonacci retracement from this swing low here on 29th of June, and we'll end up with the swing high on 14th July. So we've got all the Fibonacci levels as well. Alright, so we can see 23, 38, 50 all being broken, and currently price is trading just above the 61.8% Fibonacci retracement level. Alright, so we can see that should offer some support for price in the near term for pound dollar. So we can keep 78.6, 61.8 and 78.6%. So let's tidy up the chart. Okay, so we can probably expect price to find some support around this level here at 1.2801 or just 1.28 itself. Right, so let me just identify this. Okay, here. Right, this is how, as we can see, the first support has been broken at 1.2850, but price does seem to be stabilizing above the 61.8% Fibonacci retracement, and we could see price rebound to move higher as well. Okay, now with regards to the second support on a 4-hour chart, I guess the second support would be, yeah. So I can see a nice overlap here as well across these pullback levels. You can see, yep, this level here at 1.2752. You can see a pullback here on 10th of July, price running into resistance on 6th July, 27th June, as well as 26th of June. Right, so on the and if you zoom out, no, there's nothing else, no overlap there. So okay, so if it's based on the H4 time frame, we can see currently the first support for pound dollar coming in at the 61.8% Fibonacci retracement level, which is at 1.28, and the second support level, should this 61.8% Fibonacci retracement be broken, would be at 1.2750, where we can see a pretty decent pullback support here as well. Right, 10th July, 6th July, 27th June, and 26th of June. Right, now to the upside. In terms of upside, I can see a pretty decent overlap here as well. So this level here at 1.2904, we can see price bouncing off this level on 12th of July, as well as on 19th of July, and then as recently as 21st July, price running into resistance here. So in terms of resistance, okay, naturally this first support here would now be first resistance, right? And then the second resistance is here. So let's just label everything more clearly. Right. Second resistance is at 1.2904. We can see a nice overlap here. First resistance is now at it is now at 1.2850. This was previously the first support, so now we've identified it as the first resistance on the H4 time frame. And the first support is at the 61.8% Fibonacci retracement, and the second support would be at this pullback level here at 1.2750. Right, so this is I would say the more actionable resistance and support levels for the H4 time frame. All right, so this is pound dollar, and I don't know, I'm not too okay. I think it's still a bit too early to do a Fibonacci retracement here, because we've only had one candle that is not even closed yet off this swing low on 24th of July. So it's not really a good idea to pull the Fibonacci retracement at this point, but it's just to see where the levels are. So you can see, okay, this second resistance is in between 23 and 38.2%. So just to give you an idea of when we should pull the Fibonacci retracement here after it's made a swing low, at least you would like to see two candles. So I'm on 4-hour time frame, so at least if you see this candle close higher and the second candle after this close probably higher or above this swing low, then I think we can confidently say that this level here on 24th July would be a swing low. Then we can do the Fibonacci retracement starting from the swing high on 13th July and end with the swing low on 24th July. But right now it's a bit too premature to call this or identify this point as a recent swing low. So that's why I'm not going to do Fibonacci retracement here. What I can do is I can do a Fibonacci extension. So we'll start here. Swing low on 29th of June, go to the swing high on 14th of July, and end here on 29th July. Let's pull up all the fibs. 68, okay, still too, okay, everything's, yeah, way too far, not yet, okay. No, we can't use the projection yet. Anything else can we use? Let me see, try a projection from here. Now it's broken everything. So if we've done a projection here, we can see price breaking through 68%, 78%, as well as the 100% Fibonacci projection levels. You can see it's broken a lot of levels recently. Okay, so I think this is what we have. This is the analysis for pound dollar on the 4-hour time frame. Right. If there is there any other request, please feel free to drop your request in the live chat box. And I'll be happy to go through the analysis with you. Otherwise, we can take a look at dollar yen as well. Alright, so these are the levels that were identified on the daily time frame. So likewise, if dollar index rebounded strongly last week, naturally dollar yen is going to rise together with it, and especially when we have the monetary policy divergence with the Federal Reserve and Bank of Japan, we could see this pair probably push higher as the week progresses, right? Especially on Friday when the Bank of Japan uh, announces its interest rate decision. All right, Jack. Yeah, gold. We'll come to gold after this as well, for sure. All right. Okay. So let's just zoom in onto the 4-hour time frame. All right. So we can see. Okay. So we can probably do a Fibonacci retracement here, right? Because we can see we have at least 6, 7 candles on the 4-hour time frame that have been formed since we saw this swing high last week. So this is a good indication that this is indeed the recent swing high, and you can start from this swing low on 14th of July and end up here on 21st July. So we can see the first Fibonacci retracement at 23.6%, and the next one is at 38.2%. So let's just keep these two levels and see if they do line up with any good overlaps as well. So we're not only looking at Fibonacci retracement levels in isolation, we would like to see a nice overlap level as well, and I found one just as we speak. So if you look at 141.30, we can see a very nice overlap where price has run into resistance on 15th of June, found support on 20th of June, and now it looks to have and it found support last week as well, 21st of July, and again it's finding support here as well. So on the 4-hour time frame, this would be our first support, as we see a very nice overlap. The price has reacted off this level multiple times. So the first support is at 141.27. Okay, so do take note, we have not used any Fibonacci retracement levels, but we found actually a very nice overlap level here instead. Okay, now what about the second support level for dollar yen? It's not in terms of overlap. There's no really at a good level, rather, sorry. Probably if we really wanted to, we can see that this level here at 140.75, it aligns closely with the 23.6% Fibonacci retracement, and we can also see price running into resistance here back in 28th of May and as well as on 30th of May as well. You can see a couple of instances where price has reacted off this level. We can see a nice swing here, swing high here, price reacting off this level quite nicely, or rather quite strongly, before finally breaking through. So I think because we also have the 23.6% Fibonacci retracement to back us up, this level at 140.75 could potentially be a pretty decent second support area. Okay, so this is dollar yen, and right now we see dollar there. See, as naturally as dollar index is falling, we can expect dollar yen to fall as well. So if that were to happen, and if we were to break the first support, the next support for the dollar yen would be at 140.75. Now to the upside, we can also see a nice overlap here on the 4-hour time frame as well, and it also aligns closely to where the first resistance is identified on the daily time frame. So in this case, I think I'm going to label this as a zone rather than as a line. So you can see this level here. So roughly, right. So we have a zone, first resistance zones between 142 and 142.27, right? So we can see on the 4-hour time frame as well, price bounced off this level here, which also aligns with the 61.8% Fibonacci retracement level. And just as recently as last week, we saw price react off this level and fall lower. So we have a resistance zone that starts from 142 all the way to where the first resistance is identified on a daily time frame at 142.27. So this is our first resistance zone. Now with regards to the second resistance for the 4-hour time frame, this second resistance on a daily time frame at 145 is just simply too high. It's not very actionable for us. But I think this level here, we see a nice overlap probably, yes, this level here at 142.95. You can see price finding support here on 23rd of June, and then again on 26th of June, and then again on 7th of July before finally breaking through, and then it ran into resistance here on 10th of July as well. So once again, we see multiple instances where price has reacted off this level, be it as a support or resistance. So I think for the 4-hour time frame, the second resistance at 142.95 is a pretty significant level. And okay, what about the 78.6% Fibonacci retracement? Do we see? No, okay, just simply 78.6 is just too far, so let's just keep 61, right? Okay, so just to recap, dollar yen for the 4-hour time frame, price is currently testing the first support at 141.27. Second support aligns close with the 23.6% Fibonacci retracement, as well as the swing high here on 26th of May. First resistance is a zone that's identified by the Fibonacci retracement at 61.8%, as well as the first resistance on the daily time frame. And the second resistance is at 142.95, which is identified by this overlap here. Alright, let's slide over into gold. Okay, so once again, we'll start on the 4-hour time frame and then zoom in into start on a daily time frame and then zoom in into the 4-hour time frame. Okay, right. Okay, so yes, as dollar index had a strong close to the week, strong finish last week on Thursday and Friday, naturally, we can expect gold prices to retreat, and that's what it did. Okay, so we have done the Fibonacci retracement here on the daily time frame. You can see the first resistance aligns close to the 50%, or aligns pretty much in line with the 50% Fibonacci retracement. Let's just zoom in a little bit here. And we also have a Fibonacci projection where the 100% is here at 1991.52, and the 50% Fibonacci retracement is at 1979.68. So we have this zone here that we have identified as the first resistance. The second resistance is naturally the swing high that was formed on 4th of May. First support is this nice overlap here at 1935, and the second support is the swing low on 29th of June. Alright, now that we've done that, we've established the resistance and support levels on the higher time frame. Let's look at the 4-hour time frame. Okay, so right, we can also do, now that we've seen this swing high being formed on 20th of July, we have the swing low here on 29th of June. We can do a Fibonacci retracement to try and find some more actionable support levels. So price broke through the 33.6% retracement, and also it was a pretty decent overlap. You can see here at 1965.77, there's a strong overlap here. This was broken today, and rather it was broken last week, and it's now trying to break through. So this, from a more actionable point of view, hang on, right, here we go, right. So based on the 4-hour time frame, as price broke through this level last week, this would have been a pretty major support level last week, and it was broken, which now acts as a resistance. So on a 4-hour time frame, we can set this level at 1965.15 as our first resistance, where gold is currently testing, right? So if price were to break through this level, then we can expect it to push towards what was previously identified as the first resistance on the daily time frame. But remember, we are now on a 4-hour time frame looking for more actionable levels. So what we're going to do is we're going to switch this to the second resistance. All right, and of course we can get rid of this, and let's just clean up the Fibonacci retracement levels as well. Okay, maybe we'll just 23 can no longer be used as this level was broken last week. We can probably just keep 38 and 50 on for now to help us identify any other support levels. Okay, so we look here on the 4-hour time frame, right, we can see a pretty decent support level here at 1940.29. You see a nice overlap here that's been going on since 25th of May. It also aligns well with the 50% Fibonacci retracement. And in terms of support, I think I will probably use this level here as an intermediate support. You can see price finding some buying demand coming in around this level. So in terms of an intermediate support for gold, 1958.75 would be a pretty decent level as an intermediate support. And in terms of the first support, this level, this nice overlap here that aligns with the 50% Fibonacci retracement level at to give us 1940.29 would be a very good first support. So I think for 30, we're just going to keep 50% and get rid of 38. Just make it more, adjust the labeling so it's much more visible for everyone. Alright, and for second resistance, second support, something that's probably a bit more actionable for us on the 4-hour time frame. Okay, let's see for the second support. Okay, just gonna get rid of this. Second support would probably be looking for nice overlaps as well. Yeah, probably around this. I think this seems to capture most of the points better. Okay, so 1929.64 is a nice overlap level where we can see price bouncing off this level on 15th of June, then again on 20th of June, and obviously before breaking through it and then finding resistance on 23rd of June, and then also ran into some resistance here on 27th of June. So multiple instances where price has reacted on this level as a support or resistance. So for the 4-hour time frame, 1929.64 is our second support level. First support level is at 1940.29, which is a nice overlap starting since 25th of May, which also aligns with the 50% Fibonacci retracement here. Then we have an intermediate support where price has just recently bounced off this level. First resistance here is currently being tested. We can see it's a nice overlap at 1965.15, and the second resistance is at 1979.68, which is also a strong overlap, which aligns with the 50% Fibonacci retracement for this big move here that started on, what is this? This is from this swing high on 3rd of May, ending with a swing low on 29th June. Okay, so we have the overlap and the 50% Fibonacci retracement to help us identify the second resistance. And also we have a big zone that's, I guess, more applicable on a daily time frame that is identified with the 100% Fibonacci projection. Alright, so naturally as dollar index is retreating, we can expect gold to rise and potentially test this first resistance and probably break higher. Alright, hi Calvin, good to see you as well. Alright, so that's gold. Now, let's see. Okay, since we covered DXY already, dollar index, and since we've had the three central banks coming up this week, the Fed, BOJ, and ECB, so we've covered dollar yen, we've covered DXY as well. So let's look at the euro, right? Okay, now let's go back to the euro. Okay, first of all, we'll start with the daily time frame. So after last week's strong rebound in the value of the dollar index, naturally the euro is going to come down crashing hard. It is currently testing the first support on the daily time frame. So let's see. Okay, how did we get some of these levels? Okay, first of all, we can see a nice overlap here. Price running into resistance here back in 25th of April and 3rd of May. And this level also lines up well with the 38.2% Fibonacci retracement, which now has been broken. Then we also have a Fibonacci projection here, right? That's helped us to identify the second support. We can see the projection at 61.8%. So this projection was drawn from this swing high on 21st of June, ending at the swing low on 6th July, and ending at the swing high on 18th July. And then the projection level of 61.8% lines up well with this recent swing high as well. So this is where our second support was identified. Then second resistance, if we zoom out, is this level here on a much higher view. We can see that the price level at 1.1509, price has reacted on this level as support and then running into resistance after that in February of last year. Okay, so this is daily time frame. Now let's look for more actionable levels. So we'll switch into the 4-hour time frame. Okay, so we've done the Fibonacci retracement. So we have 38, 61. 38 is no longer valid. Maybe let's just see 50 and 61. Do we have anything that lines up? No. Okay, probably not. Okay, so I think we'll just keep 50 here just to give us, it's not really a level, but at least just to give us some indication that, okay, price does seem to have found support above the 50% level, 50% Fibonacci retracement, but we don't see any nice strong overlaps, like nothing too clearly, I guess, yeah. Except maybe if you really wanted to sort of push it, but no, I don't think so. Maybe if you wanted, yeah, you can see price running into resistance here a couple of times. So maybe it could offer some sort of support in the near term, which also aligns with the 50% Fibonacci retracement. Okay, so naturally this first support was broken. Now we're going to change this to the first resistance. This second support on the 4-hour time frame would be our first support. Alright, morning Amar, good to see you as well. Welcome and thanks for tuning in. This would be our first support. Okay. So once again, this first support was identified by the Fibonacci projection. What else can we see? Okay. Now what about any other resistance levels that we can identify? Maybe I'll just switch this to just generic resistance and try and find something that's more actionable. Okay, let's see. No, here. Okay, as we mentioned, we're not sure if this is definitely the swing low here because the next candle here has not closed completely. We've got to wait for this candle to finish and at least see another second 4-hour candle to close to properly establish that this swing low here on 24th of July is indeed the swing low. Okay, let's just keep it as a rough guide, and perhaps we can use the 38.2% Fibonacci retracement as the second resistance level. Alright, although I don't see anything else in terms of an overlap. But yeah, I guess we can probably use this for now until we get more clarity on the conclusion of this swing low here. Okay, so I'm just going to tidy up the Fibonacci levels. Okay, so once again, this Fibonacci retracement level started from the swing high here on 18th of July, ending with a swing low on 24th July. Like I said, although the current candle has not completely closed, so we are not sure whether this is a definitive swing low, but just to give us some guideline on how to identify the second resistance, you can see a pretty decent pullback levels here at 1.1143 that also aligns with the 38.2% Fibonacci retracement. Alright. Hi. Alright. Hi, Munabai. Alright. Okay. Yeah, we'll cover oil as well. We'll switch on to WTI oil after this. Alright. So, euro dollar. Yes. Okay. So, as usual, the Fed will be making the first move when it comes to central bank actions, and they're likely going to raise interest rates as well. Another quick way to see what the Fed is going to do. That is for those who may not be familiar. If you type CME Fed Watch tool into Google, right, it'll give you this link. The first hit is the one CME Fed Watch tool. This is a website that gives you the probability of the latest FOMC moves for every meeting, right? As you can see, the next meeting is on 26th July, and also you can see the target probabilities for 20th September, 1st November, and so on and so forth. So for 26th July, there is almost a 100% chance that the Fed is going to raise interest rates by 25 basis points. So currently the target rate is 5 to 525. So this basically means 5 to 5.25%. And when they raise it by 25 basis points, they're adding a quarter percentage to this. So basically 5.25 will now become 5.5% after the FOMC meeting, right? So it's almost a certainty that they're going to raise interest rates again. Right, so this is a good tool to just track every now and then to get an idea of what the market is actually pricing in with regards to rate hikes by the Federal Reserve. Right, so we're going to have a lot of big moves starting on 26th of July, and it's going to impact naturally all the other currency pairs. So do take note of that event that's going to take place. All right, okay, we can go on to oil as well, and yeah, sure. Hi, David. Yeah. All right, we'll do dollar franc as well. All right, for Miami. So I hope you managed to catch Leo Messi as well. All right, okay. Oh, I didn't see that Swiss franc came in first. Okay, doesn't matter. Let's just do oil first. Okay, so oil has been on a strong rebound since 29th of June. Although the outlook for oil generally is not hasn't been so great recently, but part of the recent move here is a combination of expected stimulus measures from China. There's a lot of anticipation by traders and by the markets as well that China could uh, release further stimulus measures that could help uh, boost its economy. And because of that, we've seen this pretty strong rebound in the price of crude oil in general. So, okay, um, with as trading started earlier today, we saw that price was testing the 61.8% Fibonacci retracement. So this retracement was done on this swing high from 17th of April down to 4th of May. So yeah, you could see price exactly run into resistance here last week on 13th of July, or rather 2 weeks ago on 13th of July. And then it was testing this level again last Friday, and finally it's broken through. So now this is I would probably label this as our intermediate support. Naturally, now that this level has been broken, 68 can't be used. So let's see where 78.6 is. 61% can't be used. Let's see where 78.6 is. Okay, it's pretty high up here. But in terms of overlaps, I think something maybe more actionable. We could probably use this level here, right? Okay, first resistance. I think no issues for this for second resistance. Right, okay. So right now, we're looking for more actionable levels. As you can see, price is currently moving. It's broken through the intermediate resistance at 76.86. It's now making a push towards 78.90 where the first resistance is. First support is at 73.60. We see a very nice overlap as well. And second support is the I guess recent swing low here, or multi-swing low here, that's been going on since 3rd of May. Okay, let's zoom in onto the 4-hour time frame to see if to fine-tune the analysis and see if you missed out on any levels. I think most of the levels for oil are in. As you can see here, if I were to just even zoom out all the way, if I take it from here, right, so this was a pretty decent intermediate overlap for an intermediate resistance, which now has been broken. So I think we can use 76.85 as a very decent intermediate support level now. First support would be, I would say, probably be close to this zone here. Right, so now we're looking for more actionable levels on the H4 time frame. So I would say the first support now would probably be within 73.60 and what is this 74.10 as the first support zone, and then the intermediate support would be at 76.85, and we have the first resistance identified by this very nice overlap here at 76.92. Okay, then second support. Alright, this second support was identified on a daily time frame. Is there anything that we can see that's much more actionable and for us to use? Probably a bit, maybe this level here. Let's see at what is this 76 72.60. Yeah, I think this would probably be a better level to identify as a second support on the 4-hour time frame. Right. Yeah, probably this would be something that's more actionable here. Okay. So seconds for 4-hour time frame on WTI oil. We have it at 72.50. Basically, first support is a nice zone here at 73.60 to 74. We can see price has recently broken out of this intermediate resistance or our previous intermediate resistance, which is now our intermediate support. It is quite likely that it's going to make a push towards the first resistance, right? At least towards $78 per barrel first, and perhaps beyond, right? Especially if the dollar index starts to pull back as well. Remember, commodities are priced in the US dollars, so if we see the dollar index falling, then generally this provides some sort of lift to commodity prices as well, in general, right? Generally speaking. Okay, so do take note of that. Um, and also for oil, yes, just look out for any stimulus measures by China, because once the confirmation markets receive confirmation of this stimulus measures, it's quite likely crude prices are going to climb even further. All right, now let's go on to Swiss franc. Okay, so start off with a daily time frame. So as we mentioned earlier at the start, since 6th July, the dollar index or the US dollar was selling off hard. So we saw dollar index fall, so naturally dollar franc is going to fall over this period as well. Remember, during this period we had PPI data and CPI data of the US, which showed strong disinflationary trends, which means the US dollar gets weaker, or markets and traders will sell the US dollar as we can see inflation sort of retreating pretty strongly. And then last week we had strong unemployment claims on Thursday, 20th July, which helped to prop up the value of the dollar index and the US dollar, so hence dollar franc had a nice bounce last week on Thursday. Right. Okay. Excuse me. Sorry. Okay. So in terms of first support on the daily time frame, we have used this Fibonacci projection here, starting on 3rd of March, going to the swing low on 3rd of May, and ending with the swing high on 1st of June. So using the 100% Fibonacci projection level, we have identified the first support, and we can see price come very close to this level before reversing from this. Oh, yeah. So you could say that it's probably a zone here as well, because we can see if we take the body of the candle and the 100% Fibonacci projection level, so you can see this is our potential. Well, this is our first support zone, right? Not potential, it is our first support zone. You can see price clearly bouncing off this level last week. Now, for first resistance, if we zoom out a little bit, we can see this swing low here on 7th of Jan 2021. So as price broke through this level on 12th of July, naturally this major support has now become a major resistance. And the second resistance is identified by this nice overlap here at 89 cents. Alright, HMH. Okay, there's a question on fundamentals. Okay, macroeconomic. Okay, I'll see if I can answer that question towards the end of today's session. So just let me continue with dollar franc first, and I'll see if I can try and see how we can do this. All right. Okay. Personally, I didn't read any specific books on central banks, but okay, let's get to that. in a while. Sorry. Okay, so right, we can also see and probably do a Fibonacci retracement here from this swing high on 31st of May going down to the swing low here on 18th of July. Let's pull up the Fib levels. Do we see any nice uh levels that align with the overlaps? Okay, so we can see 38 and 61% line up well, so we can use that as well. So not only do we have strong overlap levels, we also have levels that align with the 61 and 38.2% Fibonacci retracements. Okay, let's zoom in onto the 4-hour time frame. Right, and okay, since we have formed this swing low here, swing high. Let's see. Okay, so there does seem to be some intermediate support at probably about 38%. You can see price last Friday find support above this level before moving higher, and now it's falling down here again. So I guess you could just, again, this is not a definitive support level, but just something to use as a guide, because we see it line up pretty well with the 38%. And as we saw last week, price has sort of bounced off this level here, or just above the 38% last week. So just use it as a guide. It's not a very solid or convincing support level, but something just to bear in mind here, right? So that's why I would call this an intermediate support that aligns with the 38.2% Fibonacci retracement, and we can also see price action sort of reacting above this level last week, right? So this is not a major support area, but more of a guide to let us know that yes, okay, price did react off this level last week. Is it going to find support here again? Right, it's not a very strong support. I repeat, this zone here between 86.35 and 86.50 is not a very strong support, but just to give us an indication that price could potentially run into some support here. All right, okay. Then what else? And okay, in terms of intermediate resistance, I think this is very obvious, right? You can see here price running into resistance last week, 20th of July, and also more recently just today. So this is a very good intermediate resistance. If you wanted at least for the 4-hour time frame, I would even probably label this as my first resistance. If you want something more actionable, yeah, I think because we can see a very nice double top in a sense on the 4-hour time frame. So I think I would use this as the first resistance, and then I'll change this, what was previously the first resistance, to second resistance, and I'll get rid of this second resistance here, because now we are looking for more actionable levels on the 4-hour time frame. So it's always good to start with the daily time frame to get an overview of where how that currency pair is currently trading, and then take note of those levels. And then when we want to zoom in onto the 4-hour time frame, we try to identify more actionable levels, which is what we are doing right now. Okay, that's the case, I would probably say that even for the H4 time frame, probably this level here would be my first support, right? This would probably be my first support here. I'll just use this as the 100% projection. I'll still keep it on, but I'll just keep it as it is without any labeling. So I think on the 4-hour time frame, first major support would be at 85.64. Intermediate support, not very strong. I stress this intermediate support is probably not very strong. Would be at 86.35. First resistance here is pretty clear at 86.83, and second resistance is at 87.61. On this, I'll just keep this as without the label, resistance level without the label. All right, okay. Right, coming close. Okay, let me see. For central banks, I don't macroeconomic books. Okay, let's just do a quick Google. Okay, one of the books, okay, again, I've not read this Ray Dalio book, but there have been some pretty decent reviews on Ray Dalio's book, The Changing World Order, which focus on not only on macroeconomics but on very high level global view of why nations succeed and fail and how it relates into macroeconomics, currencies, commodities, and so on and so forth. I think probably that's a good, decent book to start to read with. And what else? Economic indicators. Um, Actually, we go to the IC markets page, resource pages. There's a good place to start with as well. Go to the resource page on IC markets website. They'll have a good starting point for you to learn more about economic indicators and any other fundamental and technical analysis information as well. All right. Yeah, we'll end up with pound Aussie. Right, let's go to pound Aussie. Alright, okay, so this is the chart for pound Aussie. Right, we'll start off once again, as we mentioned, on the daily time frame to see where price is actually trading. And if you zoom out for the Aussie pound, we can see that price, when was this? 11th of July, actually hit pretty much a 3 year high. Right, so the last time price was trading around this level was back in May of 2020. So you can see how much the pound has gained versus the Australian dollar, just to get some perspective the what would I say, the magnitude of the move, right? On the magnitude of the move since it bottomed here on September 2022. So you can see it's hit a 3 year high recently and it's been pulling back from this level. All right, okay. Now let's see what can we do in terms of Fibonacci. This is 100%. Okay. Okay, so we can probably do let's see, to see how does this look. Okay, let's see how this looks on a weekly time frame, if it captures it. Okay, so what we are trying to do is, whenever we do Fibonacci retracements, whether it's on a weekly time frame, daily time frame, or whichever time frame that you use, the trend line that you see here, this dotted line here, that runs through the middle, it should try to capture the price structure as close as possible, right? So we can see here that the candles are trading pretty close to the trend line on the upside and to the downside as well. So that's pretty decent. We don't want a case of the trend line not capturing the price structure very well, because if that happens, then generally the subsequent Fibonacci retracement levels may not offer any real significant support or resistance levels. So I think this is a pretty decent uh, level to or starting point to use, which was on 30th of Jan, and we ended at 10th of July, and we can see that price has indeed, or at least previously, reacted off 38%, which now indicates to us that this could be a potential second support level. Okay, let's see what else. Okay, let's go back onto the daily time frame. Okay, we can see a nice overlap here. Pretty not the best overlap. I agree, it's not the best overlap, but you can see how price has uh, bounced off this level back on 9th of May and again on 7th of June before finally breaking through here and then bouncing off here. In terms of first support, okay, I see a nice overlap here for the pound Aussie. I see a very nice overlap here. So I would use this as my first support, which is at 1.8979, and price is coming close to testing this support level. In terms of resistance, let's see, we can also do a Fibonacci retracement from this swing high on this 11th July going to the swing low on 20th of July. Let's see, do any of the Fib levels line up? I think we can probably use 61. Yeah, I think we can use 61. Let me clean it up so we can see why we're using 61. So we can see here price running into resistance here on 17th of June. And also if you go back all the way to 31st of May, you can see price running into resistance here as well. And it also lines up with the 61.8% Fibonacci retracement. Alright, so that's how we've identified the first resistance and the first support on the daily chart. let's see what else. Okay, naturally, then the second resistance on the daily chart would be the swing high. Second support, let's see, 38. You could just use the swing low here, the wick of this candle, as the second support on a daily time frame. Okay, now let's zoom in onto the 4-hour time frame. Let's see if you can sort of fine tune this level. Okay, as we can see here, it doesn't look very good, and the overlap doesn't look very good on the 4-hour time frame, but I think on the daily it's pretty alright, and also it lines up with the 61.8% Fibonacci retracement. And if you look on the 4-hour time frame, I would also identify this as a potential intermediate resistance. You see a recent swing high here, price reacting off this level since today, right? Its price opened early Sunday morning, but rejected around this level and started dropping. So I think this would probably be a decent level to identify as intermediate resistance at 1.9111. First support, okay, on the 4-hour time frame doesn't look very good, but if you zoom out onto the daily time frame, it certainly looks much better. So sometimes it's important to toggle between the various time frames to try and identify key support and resistance levels, because what may look good on one time frame may not look on the other one. But in this case, since it looks pretty decent on a daily time frame, I think I would use that as precedence over the 4-hour time frame, right? Remember, the higher time frame usually gives us a better overview of price action and the levels, support and resistance levels. So we can see it on the daily time frame, and this is clearly a very strong support level. So I think we can just keep it at that. And for second support, if I just were to tidy up, I would probably take this body of this candle here. Okay, so for pound Aussie, these are the levels, support and resistance levels on the 4-hour time frame. All right. Okay, so that's the analysis for today. Just to recap, do take note of the three major central bank announcements this week. We have the Fed on 26 July at 6 p.m. GMT. They'll release their interest rate statement, followed by the press conference by Jerome Powell, Chairman Jerome Powell, at 6:30 p.m. GMT. This will provide us with further insights into the state of the economy and what the Fed is thinking and what is their outlook for with regards to future rate hikes. Then we have the ECB on 27th of July making their announcement at 12:30 p.m. GMT. 12:15 p.m. GMT, followed by the press conference at 12:45 p.m. GMT, where ECB President Christine Lagarde will similarly be giving her insight and outlook for interest rate projections. And finally, Bank of Japan, right? Okay, so Bank of Japan, do take note, it's not a fixed time. They actually don't announce the actual time in advance, but it's going to take place on 28th of July, and most likely the statement will be released at 4 a.m. GMT. Generally, that's the time where we can expect the Bank of Japan to release its statement at 4 a.m. GMT, and usually 1 to 2 hours after that, the press conference will follow. All right, and if you just take a quick look at what dollar index is doing before we sign off. Yep, okay, you can see after breaking through the first resistance at 101.10, price has sort of run into resistance at 101.37 and started to pull back. And let's see, quite likely it could continue to fall towards what was previously the first resistance. All right. Okay, thank you everyone for tuning in. I hope this has been a great session for all of you. It's always good to see new names as well as old names, of course. And do remember, do not hesitate to drop your requests in the chat box for future sessions as well. And yeah, looking forward to catching all of you at the next session on the 2H time frame. Please. David. Okay, do you mean the H2 time frame? So the 2 hour time frame, David? I can take a look at this and try and get back to you at the next session. Yeah, 20. Oh, 21st. So 21st July, but 2 hour time frame. Do I read you correctly? 20th. Okay, 20th. All right. Okay. There. Unfortunately, we've running out of time here. So okay, I'll try and look into this, and definitely I'll try and update you guys at the next session. Do look out for upcoming streams by my colleagues as well, by myself and by my colleagues as well. And yeah, have a great trading week. And yeah, for those who have also missed Desmond's pre-market analysis, it's already up on YouTube, so you can visit that in your free time and watch the analysis as well. All right. All right. Thank you, everyone. Take care and have a great week.